Hello and welcome. You are watching Business Today Television. I'm Sakshi, Batra, and this is the earnings special edition where our focus is on PNB Gilts. The company has come out with its Q4 earnings. The net profit has risen very sharply, about 405%, and it's come into 68.13 crores. The sales have also risen by 52.7% to 473 crores. Even for the full year, the net profit reported is at 69.4 crores in the year ended March 2024, as against a loss that the company had reported during the previous year of 77.2 odd crore rupees as well. To discuss and to decode for us some of the insights from these Q4 earnings and the outlook going forward, joining in is the top management of the company. Mr. Vikas Goel joins in. He's the MD and the CEO of PNB Gilts. Welcome to you, sir, on Business Today Television, and thank you so much for taking the time out for this conversation. Great set of numbers coming in. If you could list out for all our viewers what have been the contributing factors for yourself, and now how will the momentum build on as we enter FY25, sir?
Thank you, Sakshi, for having me on your show. Let me once again reiterate what we do. So essentially, we are primary dealers in government securities. So we have two primary sources of income: net interest income, which is basically carry, and trading income, which is capital gains. So last quarter and in the full year, particularly the last quarter, we had both the engines firing. As financial conditions eased, we had net interest income as our net interest margin got rebuilt. We had net interest income coming in, and that also had an impact on duration or longer term securities. So we also had our trading income, which was almost about 55 crores in last quarter in terms of capital gains, both realized and unrealized. So both the engines fired very well, which obviously contributed to a full year ending on a good note.
Okay. So actually going forward now, there is an expectation that the interest rate cycle is going to be reversing as well. Even the US Fed is now indicating that whenever the next action comes, it will be of a rate cut, even though we do not know how much time that will take based on the uncertain conditions like inflation. But how will it impact your business working and the profitability if we look at that scenario emerging at some point in this new fiscal year, sir?
Sakshi, you stole my thunder. I was about to talk about the Fed, etc. So exactly correct. If you saw what happened yesterday, and Reserve Bank has been leading the way. As I said last quarter, in the last year, Reserve Bank started reinstating accommodation, which means basically the liquidity which had been withdrawn from the system, it became slightly more relaxed with liquidity. And the Fed yesterday did essentially the same thing. The quantitative tightening program, where they were selling securities and withdrawing $60 billion a month, has been reduced to $25 billion a month. So one thing is very clear, that rates have peaked. Slowly, the glide path is eventually to a cut. As you rightly said, when will it happen? We don't know. But the direction is very clear. It will happen. When is a question. The US market, when the calendar year started, was thinking of 6 rate cuts of 150 basis points. Currently, only a single rate cut of 25 basis points is being discounted. And the popular thinking in the market is that Reserve Bank will follow the Fed. So it looks unlikely that this year we will have a cut from Reserve Bank locally. Having said that, as I told you, the year in all probability will be a year of carry income or net interest income, because financing conditions have eased. So it's hard to obviously forecast in our kind of business, because like I said, it's a trading business and we are in financial markets which are quick to react to events. And right now there is a great deal of uncertainty, both on in domestic, at least the domestic concerns are about monsoons, around food inflation, so on and so forth. Globally, geopolitical risk is a big uncertainty. So obviously, it's hard to predict what is going to happen. Having said that, what we think is that financing conditions will remain easy, thus giving us net interest margin. We are also rebuilding our balance sheet as securities come up for maturity. We are replacing them with higher yielding securities. Therefore, our net interest margin will continue to improve as we go forward in this year. So most of the contribution to our bottom line will come from net interest income. And there will be some scattered opportunities on the trading side, which we will take advantage of.
Okay. Sir, also wanted to ask you, since you did clarify that, you're in the business of debt broking, now that the bond market will open up, sir, how is that going to be changing for you as life for PNB Gilts? And now that the bond inclusion will also start in 2024, for you, will there be more market making opportunity at this point in time? Will there be a sizable uptick that will happen on the revenue front as well? How would you look at these factors?
Ultimately, it's a function of how the yields move. So when yields come down, prices go up, and that is good news for us. So obviously, as I've said in the past, index inclusion, which means roughly starting from June onwards, at least the JP Morgan will add about roughly about $2.5 billion worth of demand in the market. Obviously, demand will impact pricing. And that is, as I said, good news for us. But I don't think it will be impact so essentially what will happen is that it will be averaged out over the month. So therefore, I do not see a substantial impact on the market in terms of, it is not that suddenly a big flow is coming in. So it will be gradual on a daily basis, they will average in. And so essentially, we are still driven by macros. Why our yields, despite the volatility in US Treasury, are underpinned? One of the reasons is this potential demand, passive demand, which is coming.
Right. Sir, also wanted to understand, apart from JP Morgan's bond inclusion, are there any other events that will be very important for you to really look at that could perhaps investors also watch out for?
The numbers for us, obviously, it's a growth inflation trade-off. So the numbers to watch for us in terms of macros is the growth numbers domestically and inflation numbers as they come through. If the glide path suggested by Reserve Bank in terms of Reserve Bank forecast is correct, then in all probability, we are looking at maybe as of now, the market is not discounting it. The Reserve Bank may move ahead of the Fed, though the market thinks that Reserve Bank will lag the Fed. Second thing is, obviously, we have to see what is happening in US. As of now, as you said, it looks like higher for longer, though rate hikes seem to be off the table. The next move from the Fed will be a drop. When will it happen is a question. So a lot of data coming out of particularly employment data and inflation data and growth data out of US also is looked at closely by market participants, including us, because it has an impact on domestic markets. So these are both international as well as domestic factors. The last one is obviously geopolitical risk, though it looks like subdued right now. It seems to be in the background and not in the foreground.
Understood, sir. So also a little bit on your Forex business, if you could suggest to us how that is shaping up for you and what can investors really look here?
So I think Forex business, as and when it starts, we have one or two infrastructure issues which we are sorting out in terms of messaging and settlement, so on and so forth. On the hiring side, we have hired, otherwise infrastructure is in place, trading infrastructure is in place. So we are just looking at settlement infrastructure. Once we have that in place, we will start. Even when we do it full tilt, it's not going to be a core business. At best, it will contribute between 5 and 10% to our bottom line. But it is a good diversification, and obviously it is agnostic to where interest rates are at a given point of time. So it is good diversification for us, which is the intention of Reserve Bank in granting us this license to get into foreign exchange business. So yes, we will start, etc., but it's not going to move the needle a lot. It will always be a non-core business and a non-correlated business, so to speak, which will help us in terms of reducing the volatility in our earnings.
Okay, understood that, sir. So, lastly, sir, if you could give us an outlook on FY25, how is the business going to grow versus FY24, and what are the levers that will pull you to higher growth, sir?
So, as I said earlier, our business, at least for this year, looks like most of the income will come out of carry or net interest income. There will be limited trading opportunities this year because both the Fed and the Reserve Bank seems to be sort of going along the path of higher for longer. And the growth numbers both in India as well as in US allow them the leeway to continue with their focus on inflation, both in India as well as in US. So we see interest income being the driving factor in this year. As I said earlier, will this year be better than last year? Difficult call. As of now, it looks likely that it will be, but there are a lot of provisos. As I said, there are a lot of uncertainties, both domestic as well as global. Domestic, particularly on food inflation front, and globally, geopolitical risk is in the background, which can obviously come to the foreground really quickly. So there are a lot of conditions attached to this forward guidance, if you can call it that. But this is as much as I can sort of give a forward guidance. Our business, as I told you, is very volatile in terms of where the earnings come from.
Point taken, sir. Well, on that note, thank you so much, Mr. Goel, for really helping us understand what has really worked for you in this quarter and what are you anticipating in the new fiscal year as well to work good for you as the company. Major events lined up. So that will be, of course, an overhang that one can continue to look at as well and developing on that front too. Many thanks. All the very best to you, sir, for the upcoming quarters. And here's hoping that we can catch up again to understand more about how the industry is shaping up along with your own business too. Many thanks, sir.
Thank you, Sakshi. Thank you very much.
All right, and with that, viewers, we will wrap up this very special conversation with PNB Gilts. Although there are very ifs and buts, there is uncertainty, and the way things will shape up on the macro front as far as interest rate cycle is concerned, inflationary concerns are concerned, and therefore there could be some more volatility that one could really expect. But there is a hope that the management has on improving business growth as far as FY25 is concerned for the company. Many thanks, but do stay tuned as earnings conversation follow for you on Business Today Television.